Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Looking at the tech sector, lots of action, XLK, Apple, and Facebook, so our lower high is set as anticipated at the middle Bollinger Band resistance with 2 rejections in a row. The exponential resistances are there to back up the middle Bollinger Band resistance, and we rejected from that level, broke the low of yesterday, and saw downside. Granted, the bulls did buy some of that dip, but we're looking at this equilibrium pattern now with our high, low of the dump, lower high, and now we're looking for a higher low. The bulls did buy the dip significantly enough that we could be viewing this as our higher low. It really all depends on how tomorrow goes. If tomorrow we were to see an inside bar, then I would call that our higher low. But if tomorrow we were to pull back further, but still maintain the low from Monday of make that 54.77, then I would be looking at that as our higher low. So really, tomorrow's action is pretty important. Just like every day this week, the action has been very important to tell us what we're looking at. Today, the weakness, the hourly 20-period moving average being lost on a lot of these tech names, showed us that the top was in, and we saw that follow through to the downside, and now we're watching the back test of those resistances. So even though we bounced at the end of the day, we still did not get over the hourly 20-period moving average resistance on a lot of these names, and if we cannot do that tomorrow, we will still see further downside. So the weekly time frame here, bulls are trying to cling on to this exponential support here, the 8-period. We did close just below it back in April, so that wouldn't be a game over scenario for the bulls, but we are seeing a potential cross of the bearish MACD, a potential cross of the TCG. Obviously that hasn't happened yet, and that hasn't happened since back before December, before the election. So if we were to get that bear cross, that would absolutely stand out as a signal that the trend is changing in the short term. But right now, the bulls are still holding on is the main point. And over the next 2 days, how we close relative to 55.51 will be telling as to what we are anticipating in the short term. So Apple is the weakest tech name. And if I had to list the tech names, the high beta tech names that we follow in terms of their strength, or the weakest to the strongest, it's Apple, Netflix, Google, Amazon, Facebook. That is the 5 that we cover the most, and that is their ranking from weakest to strongest for different various reasons. But the fact that Apple couldn't even get over the the lower Bollinger Band resistance, just barely touched the exponential resistance, and the middle Bollinger Band wasn't even in the picture, that shows you how weak this is. And this is a bear flag bounce attempt. If we pull back and break 143.84 and 142.51, we confirm that bear flag, and we look down to lower lows. So we look at this gap here, 142.09. That's a potential short-term target to be keeping an eye on. We've got the 100-day moving average support, which is going to be approaching that gap fill level. And we already have our lower high and now our lower low. And this is a potential bear flag leading to lower lows again, continuation pattern. Bearish MACD, bearish TCG cross. So here we go. First time in 2017 that this could happen. And if we lose this weekly middle Bollinger Band, I'm looking down at 139.48, 136.49. It has been a straight shot to the moon for these Apple bulls since November, and now we may be coming back down to some reality. And in reality, we could pull back significantly and still be very strong on this weekly time frame longer term. This was just an insane move that had my jaw on the floor time and time again with how the bulls were able to keep up strong. And now we are seeing that shift a bit. Facebook is much stronger because we have that higher low and higher high. And you can see we closed just over the middle Bollinger Band yesterday, and we had a higher low and higher high again today compared to yesterday. So we held that low of yesterday. There's a little double low down at 148.90, 149.05. And if we break that level, same story. We are still anticipating an equilibrium pattern here with our high, low, lower high set. And now we'll be looking for a higher low, but we have much more wiggle room than these two names. And again, just comparing where Facebook is compared to the low of Monday and comparing where Apple is compared to the low, it's really two different stories. Weekly time frame for Facebook, still holding on to exponential support. Haven't lost the 8-period in 2017, and we are closing in on a potential bearish MACD cross, but if the bulls can hold these exponential supports, they will remain in control. Now, I don't anticipate that Facebook's going to go up and go back to its all-time high while other tech names are going to see weakness. This is just a way to gauge the strength of these individual names and to determine what to be playing. So in some of the videos in the past before this breakdown occurred, I was saying that because Apple was a laggard and because it was trading sideways and not seeing the bullish momentum that the other names were seeing, that if the tech sector were to pull back, I would be playing Apple bearish. And it's that distinguishing these individual names gives us the game plan where if we're looking to the downside, we want to play the weakest names, Apple and Netflix. And if we're looking to the upside, if we're looking for a recovery in the tech sector, we're going to be looking to Amazon and Facebook, and Google's right in the middle of those five. So knowing which names are the strongest and which are the weakest gives us some focus as to what to be looking at. And right now, Apple and Netflix are the weakest. I appreciate you watching, and we'll check back in tomorrow.